Good day, Team GCI. I'm Brad, and in today's GCI Market Outlook, let's take a look at Forex trading on dollar CAD, euro dollar, pound dollar, WTI crude oil, and the NASDAQ. Last week we talked about buying the dip on the NASDAQ. We hope you were paying attention because look what happened. As you can see, we've had a series of dips in this bull market that have reversed perfectly in sync with the stochastic oscillator when price action has fallen to the lower trend line. Just to remind you why the values fell in the first place, Jerome Powell told the market that he would not be lowering interest rates in March, so the stock market fell against the trend. When price action reached this trend line, with our favorite technical indicator spotted a reversal, we went long with the trend. This was in essence the perfect economic news trade, and you will hear me talk about these very often. If we move out to the 4-hour chart, we can see that as well price action is at a key level of resistance that has formed an ascending triangle, and the stochastic oscillator is overbought. So let's look for another pullback and keep an eye on this trend line and our indicators. WTI has been falling for just over a week now over uncertainty with the Chinese economy. Price action has broken the lower trend line, but be aware of your technical indicators like the stochastic oscillator, which is oversold right now. There are no OPEC meetings until April, so production should remain steady until then. If you want to trade news events with WTI, you can find an energy calendar online, and we can see that on Wednesday we have US crude oil inventories, so we will check this later in the week. Range trading is not for the faint-hearted, but we've been having fun with GBPUSD, and the range could not be clearer with the stochastic oscillator picking the tops and bottoms on the daily chart. You may also like Bollinger Bands if you find a range like this. In case you missed it, last Friday's U.S. non-farm payroll report was wildly underestimated, the unemployment rate was overestimated, and the average hourly earnings was underestimated, sending the U.S. dollar much higher. You can see that the news drove price action to the lower trend line on euro dollar in a downtrend, so we won't trade this until we see a pullback to the upside. However, on dollar Swiss and dollar CAD, we have the opposite, and news sent price action against the trend, with the stochastic oscillator looking very overbought. If you want to play it safe waiting for a confirmation of a reversal on dollar CAD, you might want to try the parabolic SAR, as you can see how they are at confirming downtrends. But also watch out for the big movements on WTI, which always affect the Canadian dollar.